Happy Friday, traders. It is 8 a.m. Chicago time on the 7th of December, 2018. Thanks for joining me yet again on a Trader Bite. It is Friday. Happy that it's Friday. It's been a very interesting week. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So this morning, we have a mixed bag. We just got the non-farm payrolls about a half hour ago. The number missed came in at 155,000 versus 198. First, we got a pop, then we got a drop, and then we got a run, an impulse move up, and now we've come back to the SOC, the scene of the crime, the point from which the news has come out. And that's how things are shaping up for today. The high in the overnight is the same price as the bottom of the single prints from the Fed Powell announcement a week ago that set us off on the rally. And we are just hanging out here. Pretty strong close yesterday in the S&P and across the indices. The S&P ended up putting in a neutral extreme up day, closing the gap miraculously, very low probability, closing the gap zone into uh, what is it? Tuesday's close. Um, and so very interesting behavior. Um, so across the board, we're seeing crude, of course, being up 4%, 4.25% from yesterday's settlement on OPEC news that an agreement has been reached, that Iran is happy, that OPEC has agreed to cut 800,000 barrels per day for OPEC members, and non-members will cut 400,000 barrels per day. And so, that's the way to manipulate price is to adjust supply. And so that's what we've got. There's still this China news looming. President Trump tweeted this morning that talks with China are going very well, and that he was not aware of that there was a warrant for the Huawei's CFO in Canada, who was arrested in Canada. They weren't aware that she had a warrant for her arrest when he was talking to Xi last weekend. So not sure where that leads us, but still a news-driven environment. The other thing to watch is the curve. The Fed curve is definitely making some moves. Um, Let me see. Uh, is definitely making some moves, and that's one to watch as the Fed is also watching that. I want to pop this site on here really quick. In fact, I'll put it in the chat window on YouTube if you don't see it there for members of Convergent. I'm just popping it into the Head Traders channel. This is an interesting. I've always liked this chart. It tracks yield, and you can see when you push it to the far right, you can see how the yield curve is flattening out, and there's a little bit of inversion between the 2 and 5 year. So that's something to be watched for the bigger picture, and so that's where we are today. As far as what's coming, what's remaining ahead of us, we do have the Michigan confidence number. This is the prelim. It is an important figure at 10 Eastern, 9 Central, expecting 97 for December. We're looking for wholesale inventories at the same time. We're also looking for consumer credit at 3 p.m., which hasn't been much of a mover. And so that's where we are. On our review segment, let's take a quick look at what we expected yesterday. So yesterday, the key idea was for the market to start moving up, shifting up, and then overall I expected selling down into about 26.32 and 26.26, I believe is the number, 26.26. That was the key idea. I expected the responsive buying to fail and for the market to rotate down as we were opening below the MC point of control from this region. We're back in that big balance before we popped higher on Powell news. Powell right here. And this is what I was talking about with the high of the overnight is right here. The high of the overnight, the low of Tuesday. So that gives us our high in the overnight session for last night. This is the same area. The Powell news taking off and giving us single prints. You can see that on this profile. We have singles all the way across from 26.98 quarter, I think, to 27.17 and a half. That whole area was quickly auctioned and we came right back through it. So we tested 17 and a half up here and then we got down to 02, 2702 popped up and then we closed somewhere around 26.98, 99 on Tuesday. And then today, yesterday, we came up from below and we stopped right in this region. And then overnight, we also stopped right in this region. Pretty important area to watch up here at the 2700 century figure. That's what put a close or put a lid on buying yesterday and overnight. So yesterday we pulled back, we pushed lower, we ended up pushing to 2620, pushed through by about 5, 6 points below the key target for scenario 1. So this scenario worked out, but miraculously this scenario worked out as well with the added benefit of actually pushing to close the gap zone, meaning they took it all the way back to the prior day's low. To close a gap zone, here's a statistic for you. Past performance is not necessarily indicative of future results. This is historical performance. It's looking backwards, so bear that in mind. But here's a little stat for you. When we have a gap zone, meaning between the high of one day and the low of the next, this is not a gap fill, meaning it doesn't have to touch the closing price. So if we leave a space and we open and we don't close, we don't touch the prior, if we open below the prior day's low, as in this case, and we don't touch that prior low or get over it in the first hour, there's an 80, I believe it's an 85% probability, historical probability, that that gap zone will remain open to some extent. In other words, it would not touch the prior day's low from below or prior day's high from above by the end of that session. So if we don't close it in the first hour when the initial balance is being done, then there's a 15%, which is fairly substantial, but it's still 15%. Historically, there's a 15% chance that we would not close that gap zone at all by the end of the session. And yesterday definitely fell into that with the gap zone being very wide, and it ended up closing it. So not only did it end up playing scenario 3 after playing scenario 1 completely, it ended up closing the gap at the end of the session on neutral extreme up. Very unusual behavior. I just wanted to point that out. The buyers were very strong yesterday. So that's what we had yesterday. This is what it looks like, just so that you can see it for yourself. Very noisy chart, of course, when I look, well, let's not look at it here. Let's look at it here on the 15-minute. So you can see here, we opened up right there. We went responsive. We went to 69.25. Remember, I was looking for 74. Didn't quite get there. And then it started to rotate down and it pushed down into 26.21. I was looking for 26.26. And then it pulls back in. Great setup right there. We have a market that's initiative move, in other words, moving away from the most recent auction. An initiative market is a market that's moving away from the most recent auction, which is way up here, right? moving away from prior value, prior accepted prices. So an initiative market, and then it pulls back to the IB low VWAP mid in a stock zone yesterday. Beautiful setup. Yielded about 3 points before it started to tear up into the open and push almost to the IB high, pull back to the mid and IB low on the dot, and then it extends the IB high quite the whipsaw, consolidates for a little bit, and then on the close it just tears up in the last three bars, in the last three brackets, from about 2:15 Central, 3:15 Eastern, into the close, tags the prior day's low, very slim chance given the type of day and the range that we've had. I mean, essentially, we had about 80 points of range yesterday. It's not something to sneeze at. Um, Closes the prior day, touches the prior day's low, and then pulls back a little bit, retests that overnight. That's the narrative from yesterday. Here's what's happened overnight. There's the high. We retest the high again, missed by 2 ticks. And then from there, through the Asian session, we're sellers. As soon as the Europeans come in, boom, they start selling it back to where? To the bottom of this impulse area. There are some singles from yesterday. The singles start at 26.75, so that would be the key area to the short side. It's 26.75. We knocked that out. Of course, the singles remain intact because for me, they need to be tested during the day session when the underlying equities are in play. We pull back to the mid, boom, mid VWAP test on the nose, beautiful, higher low, and then we pop on non-farm payrolls. Just now, look at this profile, very boxy profile. There's no real consensus here, very blunt. We do not have a nice distribution where we can see where prices are being accepted. We have a box profile, which means that the market is actively pursuing or actively engaging at many prices to find value. It's a discount mechanism, and it's looking for what price do we agree on, and we have a lot of prices that we agree on across the profile. And so we are actively seeking value still, and so we don't have any consensus in the overnight session. The volume overnight is about double what we would consider normal, although that's changing now that we've been in this for about 2 months. Normal is becoming a little bit higher in the overnight session. And I got to tell you something that I wouldn't have said when I came online about 11 years ago or 10 years ago. Um, the overnight session still, since the summer, early summer, still has better opportunities in many ways than the day session, even though the underlying sectors are not trading. So that's where we are. Looking again at the bigger picture, what have we done? What are we trying to do? How good of a job? So yesterday we break this trend line and we pop back up. We close the gap as you see here. So we've got this clear downtrend. We have been. Let me kill these lines here. We still have the 27.27 above us, this most traded price of the year, and we are just exploring this range quite heavily right across the board. So you could see that we have, even in the short range, not just the whole year, but going back to October or so. When does this start? Sometime in October. Uh, Going back to October, we see that there's a magnet up here. And so if we push over this point of control today, then our next target's 27.27 above. It's likely to walk, the market's likely to walk upwards um, without too much effort, in my opinion. So if you are long going into the Tuesday range, you're likely to get rewarded up into 27.27, potentially beyond. Not interested how far beyond. I'm only interested in what's likely to happen. So that's where we are. What are we doing for today? Today brings us into a very interesting setup here where we've had an incredible, a very wide range yesterday, very surprising. And we are dealing with a Friday. We're dealing with some changes in oil prices. There's still news looming. It's reality TV. It's a real life reality TV type of stuff going on right now at this trade war drama that's ongoing. But before I get into that, I want to remind you that it is Like Friday, right? Please take a moment and find the like button. If you don't see it on the website, then click on the YouTube button and hit like. You have to log in to be able to do that. Just use your Gmail account or whatever and hit the like button. That helps me out. So what are we looking at for today? Today, we're opening at the upper end of the range on a neutral extreme up day. That's the narrative. We had a very clean and clear test below, and we found buyers. So we've shut off selling as we got below this 2636 area. We see that sellers got shut off and buyers took over, and we finished on a neutral extreme up. So this morning, I'm looking for the initial test is likely to be downwards towards value. So I'm looking for an open auction. We're opening in range. I'm looking for it to be responsive towards the 75, 78, 75 area. I expect it to get tangled up here. I'm looking for an impulse up, buyers stepping in again to continue from yesterday, and I'm looking for us to breach and enter the prior day's range and to start moving towards that 27.27. Given that it's a Friday, I'm not expecting it to travel too far. Current range close to close is about 37 points. Let me check that. It's looks like it's about 37 points. So that takes us from about 2674 to about 2710, which is about 2717 or so, which is about where I've got it. So that's the main trade idea for today. The secondary trade idea is that we do get initiative right off the bat. Remember, the non-farm payrolls missed. This is a big, big input for the Fed. The Fed's mandate is not only interest rates, but it's also employment. Employment appears to be a little bit softer than expected. Was expected at 200,000, came in a lot less. So we're potentially giving Powell uh, a little more ammo to ease up on the interest rate increases. And so we get these guys coming in early on and buying it up and then pushing into the prior day's range. If this is a big if we fall back through, we are likely to target this 75 area, consolidate in here, and then start working ourselves back into neutral and balance right in the middle of this 2650, 2660 area. So how am I going to trade this? What am I going to do? I'm looking for, okay, does it open and go straight up? If it goes straight up, does it facilitate trading to the upside quickly? And it just continues to gain price on very little effort, that I'm not looking to short that. We would basically have an open test drive or an open drive type of behavior, and I'm not going to short it. I'm going to be looking for shallow pullbacks to get long, looking for the trend, and then I would be looking for 27, 27 in that case. If not, if we start to push in to yesterday's range and we start to fight, you see absorption, you see reloading on the offer, the market's stalling, buyers are attempting to push price, but they're not getting anywhere, that I'm trading scenario two. So once I trade scenario two, I know, and this is where these scenarios come into play. They don't tell me where to get in or how. What they tell me is once you get in, don't do that thing that a lot of people do, including a lot of people listening. And it's a big kind of problem, which is to get in, take the risk, take a lot of risk so they can scratch or get 2 ticks. So the idea is to get in, and what are my targets? My targets to get in on the short again will be 2675 from wherever I'm getting in. So I'm looking for, 18, 20 points of distance there. I'm not going to look for two ticks because in this case, I'm risking 4 to 6 points given the volatility. So that's why these plans exist. Okay. I've talked long. It's Friday. Watch your risk. Good luck today, and I'll catch you on Monday morning. Come back relaxed and ready to go. Take care.